If you want to become successful trader in the market, you must have some kind of edge. And trend trading provides you with that edge where you can become really, really profitable. If done properly, it gives you a very high risk to reward ratio trades where your downside is very small. You can exit the market with a minimum loss while upside is very high, where you can ride the trend to its maximum point and make a lot of profit in the markets. But the questions are how to identify a trend, how to identify areas which we could be interested in, or what are the entry areas or what are the entry points and what are the exit points. In today's video, we will answer all these questions. So in the end of this video, you can have a proper trading strategy and become successful trader. It's really basic but yet really important question to answer, that what price is doing at the moment or what is the trend of the price at the moment. So for example, if we see here, the price is moving in a wave-like pattern, what we have already studied in my previous videos, that price move in a wave-like pattern. So if you see, the price is moving up and down in a wave-like pattern, but from this price move, we understand that the price is moving towards downside. But how we know that the price is moving downside here, or how to identify the trend? So for that purpose, what we study how the price is making higher highs, higher lows, or lower highs and lower lows. So in this case, for example, the price was here. Let's consider this as a high, and the price made a low here. Then price was making this high, another low, another high. So if the price is moving in this kind of pattern where it's continuously making lows and it's not able to make new highs, we know that the price is moving towards downside and it's a downtrend. So for example, the price was here, it made a low, it made a lower high, it made a low, it made a lower high to this high's respect, it made a lower high, and this lower low was with respect to this low. So price is making lower lows, lower highs, lower lows, lower highs. And if we have this kind of pattern in the price, we know that the trend is towards the downside. While in the opposite direction, if we see the same wave-like pattern, the price is moving up and coming down, moving higher and coming down, and going more higher and coming down. If we see some kind of pattern which is resembling like this, where the price is making, for example, this was a low and the price made a high here, but the price made a low, but this low was higher than this low, so this is a lower high. And the price made a high, but this high was higher than this point, so price made a higher high. So price is making higher high and higher lows. If we see this kind of pattern in the market or this kind of price behavior in the market, we must know that the price is trending up now. So how to identify a trend? By looking into lows and highs, how the price is making lows and how the price is making highs. If the price is making lower lows, lower highs, lower lows, lower highs, we say the price is in downtrend. And if the price is making higher high, higher low, higher high, higher low, then the price is in uptrend. So this is a very simplified and very good way to identify the trend, that the trend is towards upside or trend is towards downside. Now that we know that how to identify the trend with the help of higher highs, higher lows, lower highs, lower lows, and it's an uptrend or downtrend. Now the next job is to find some areas of interest on the chart. So let's see and examine this single trend in more detail, that what are the areas we have to look for entries and exits so we can become profitable in this type of strategy. Now that we have learned how easily we can identify a trend, let's take a step further and try to understand how price move inside the trend. So if we see the price move in this trend, some moves are really sharp. So So for example, here in these areas which I am marking, the price is falling very sharply towards downside. And while in these areas here, or for example, here, the price has slowed down and the price does not move towards one direction, but in some ranges or in between two levels the price is moving. So there are two type of moves. One is sharp move and the other moves are slowing down. What we are interested in? The moves which are slow. We are not interested in sharp moves at the moment. We are only interested in these slower moves where the price has slowed down, and these slower moves are called consolidation. So what are consolidations? Consolidations are simply when price moves between two levels. It doesn't move or it doesn't deviate a lot from those levels, but it moves particularly in these two levels. And in downtrend, here for today's lesson, we will only discuss two types of patterns, which are continuation patterns. So first one is rectangle. What is a rectangle? Rectangle simply when we put prices in a rectangle, or when we try to put move of the prices inside the rectangle. For example, the price was coming here down and then it start to slow down. But how does it slow down? It slowed down and we could draw a line here, and we could draw a line here. So if price is slowing down in this pattern before breaking down and going towards sharp move, we call this one a rectangle pattern, and it's a continuation pattern. It could be a continuation pattern in downtrend, and same is true for the uptrend. The second pattern we are interested in is flag or parallel channel. So for example, this is a parallel channel and the price was coming towards downside sharp, and then it slowed down and it tries to move inside like this. We can draw a line to the upside of the price, to the highs of the price, and to the lows of the price. Although if you see in a smaller time frame, this could be a trend, but in this time frame, if the price is moving like this, so it's moving up and down in a way, but slower way. It's not a sharp move. It's not going very high. It's not going very low, but it moves in these two levels, and we call it a flag. And in this case, we call it a bear flag if it is a downtrend. If the opposite was true, what we will see later, that would be called a bull flag. So first thing, we are interested in consolidations, that price slows down, and second thing, we are interested in continuation patterns. So one pattern we are studying here is rectangle, and the other pattern we are studying is here a flag, and these two are very common patterns you will see in a downtrend or in an uptrend. Other patterns are wedges are there are symmetrical triangles, there are ascending descending triangles. We will study all those patterns in another lesson, but here we will only study these two patterns of continuation. So let's see how we can identify these two patterns here on this trend and when the trend is consolidating. So let's try to identify first rectangle pattern. So if we see here a sharp move and then the price just consolidated in between a range where we could draw a line up and a line down to make a rectangle. It's a continuation pattern and it normally breaks towards the direction of the trend. So if the trend is down in this case, the price move towards the downside. And the second one is here, if you see here, the price is moving up in between the parallel channel, or we call it a flag. So this is a flag. The price is moving in this one, rectangle, price is moving like this, and in flag, price is moving like this. And this is a continuation pattern which breaks towards the direction of the trend. So where is the next one? What is the next pattern we see? We see consolidation. So this is a consolidation. So we see a rectangle here. We see another rectangle here. We see a flag, a bear flag we call it. It's a bear flag. We see a bear flag here. So these are the patterns we have to identify in the trend. These are the areas which we should be interested in. Let's examine how the price behave in an uptrend, or how price moves in an uptrend. We already know that price move sharply and price move slowly. Same is true for the uptrend. In uptrend also, the price have sharp moves and the price have slowdown moves. So we are interested in slowdown moves, or we are interested in consolidations. So if we see these consolidations, let's see either what type of patterns we can see in this type of consolidation or in this consolidation. So let me pull out this one. So first I can see that there is a flag here. So there is a flag here, but this flag is called a bull flag. Why? Because the trend is up and the price is consolidating in two levels, but it's slowly coming down. When in a bull flag, the price will slowly come down, but in a bear flag, we have seen the price would go towards the upside. So this is a flag I could identify. This area here, this is a rectangle. This area here, it's a rectangle. And this area here, currently the BTC is again in a rectangle form, which is a continuation pattern. We will have to see if this price moves up, but these are the patterns we can see in the uptrend. So here in this uptrend, we have sharp moves and slow down. Sharp moves and slow down. We are only interested in the slowdown moves when there is consolidation and the price is making some kind of continuation patterns. So we have studied this continuation pattern, and let's see how we can enter and how we can exit according to these patterns. As we have learned that we are only interested in consolidations. So let's see how we can enter the market in these consolidation areas. So the first one is a rectangle pattern here. So let's enlarge this one and see how this can benefit us to enter the market. Now, from my support and resistance video, we know that there are two strategies to enter the market. One is a pullback strategy, the other one is a breakout strategy. So for example, in pullback, if the price is coming down and price is going up towards the resistance, and if we try to find some candlestick patterns on the resistance areas, this is the pullback strategy, and the other one is a breakout strategy, where we try to find some candlestick patterns near the support to enter the area. So these two strategies we will be trying to understand once again, and we will try to know how to enter the market in these two type of strategies. Let me adjust this rectangle. So what we want to see here, that if the price is consolidating in a rectangle form or rectangle shape, what we need to see here, some rejection candlestick pattern here. That could be many wicks of the candles, or that could be a single candle. As we have already studied in my support and resistance videos, most important two candles which I use for my trading, or which I use for entries, are one is shooting star, where the price goes up and it gets rejected back and it closes near or below the resistance area. So this is the shooting star. The price went right up and then it could not sustain here, and it came back and closed near the support resistance area. And how we enter the market in this type of candlestick pattern? On the break of low of this candle, we enter the market. What other pattern we want to see, which is my favorite pattern, is engulfing pattern. And in this case, while the trend is towards downside, it is bearish engulfing pattern. So what we want to see here, the price come up with a green candle and it closes above the resistance area, and the next candle is a red candle but right opposite to this candle, and it's engulfing the full candle here. So let me make it red for you. So we want to see a pattern like this, that one candle is green, it's breaking the resistance, and the other candle comes and it's red and it's engulfing this green candle. How we will enter in this candlestick pattern? We will enter on the break of this candle, we will enter the market, and While in the other strategy, breakout strategy, what we want to see, if the support is broken. But sometimes what happens, you see a green candle and then you see another red candle. This is a perfect example of that. So we have a support area here, and this was the price is coming down here. We see a green candle and another candle, the next candle we see a red candle, which is also here engulfing candle. So how we enter the market here? Break of this candle, we enter the market here. And these are two type of entry strategies we can have inside these patterns. One is pullback strategy, where we want to see a shooting star or many wicks of a candle, small candles, wicks of the candles, or we want to see bearish engulfing pattern like this. In breakout strategy, what we want to see, we want to see a red big candle if it is a downtrend, and if you want to short the market, we want to see a red big candle on the support, and we enter on the break of that candle towards the downside. Now what is the next pattern? The next pattern is flag. So how we know that this is a flag here, and how we trade this flag? What we do, we try to understand that how the price is behaving on the areas of resistance. This is an area of resistance in the triangle. Why? Because this upper area is always resistance and lower area is always support. So this is the resistance area, this is the resistance area, this is the resistance area. So what we want to see here, we want to see some kind of rejection candles or rejection candlestick pattern on these areas. Same, we will look for same candlestick patterns. We want to see a shooting star here, we want to see many wicks here, and we want to see a engulfing pattern here, bearish engulfing pattern here. So for example, see this one, this is a bearish engulfing pattern which engulfed this one, but we cannot take this trade. Why? Because this is the first point where we have to draw our flag, and here this area we can enter the market. If you see this candle, this is a red candle and a big one red candle, we can enter the market here. Or when the price breaks, this was a pullback strategy, and when the price breaks this support on this red candle, we could enter right here, or we could enter on this engulfing candle. Look at this, this is a beautiful engulfing candle. These are three small candles red, and then we have a big red candle. So we could enter here, or we could enter here. So these are the strategies to enter the market we use in downtrend and as well as in uptrend. How we identify the patterns here? So we have already identified that this is a flag. So how we will enter this flag? So let's draw this flag. So this is a flag. So we have two options here. Because the trend is towards the upside, we enter in on the support, or we enter on the resistance when it's broken. So in this case, we have to see, when we enter on a pullback strategy, we have to see some candlestick patterns here, and what we have to see, the same candlestick patterns we have seen here. We have to look for, sorry for that, shooting star, engulfing pattern, or some wicks around these areas. So if we see here, if we enlarge here, what we see here, there was a shooting star, but here in the uptrend, we don't call it a shooting star, but we call it a hammer. So here we can see a hammer. This candlestick, when the price comes down and it doesn't close, but it's rejected and it closes near the support area. So this is a hammer, and we want to see this kind of candlestick pattern. And how we enter? At the break of this candle. So we could enter here in this case. And the second strategy, what we want to see? We want to see how we enter towards the breakout. So once resistance area is broken, we could enter the market right here. But this was broken so fast, and this candle was very big candle, so we could not enter. Remember that if a candle is really big, you cannot enter. You have to wait for the slowdown of the move. But here the move was really sharp, so we missed this one. And don't worry, we will miss so many entries, we will enter in so many trades. So we have to let the market market show us the signs which we want to enter. So this we could have missed, but if this was a small candle, green candle up to here, we could have entered on the break of that candle. And in another price pattern, so for example, we see a price pattern here. Let's see, let's draw this price pattern. If we see a price pattern here, what we see here, rectangle. So this is the rectangle, and how we can trade this, same with the downtrend, but here only we enter on support, and when we have a pullback strategy, the price was going up and price is coming down to the support, and then either we enter on a breakout strategy when the candle breaks this resistance area or break this rectangle. So let's see what we want to see here. The candlestick patterns are the same. We want to see here some candlestick patterns which give us some indication that the price is reversing. Those could be wicks, those could be candlestick pattern, single candlestick pattern or double candlestick pattern. Here we could see this is another candlestick pattern, what we will study later. But if we see these two candles, if we get them together, they are actually behaving as an engulfing pattern. So if we see this type of pattern where the price sharply comes down and on the next candles it goes up, we have to enter the market according to that. So here we could enter the market here, and this is a beautiful breakout. This was a rectangle and the price broke out. We could enter here as well. Now let's see in the current market what are our options. So let's draw a rectangle here. So this is our rectangle. So what are our current options? So now the price is trading, our price is moving in between this rectangle. So how we have to enter this market? We have to wait for two places to enter the market. In a breakout strategy, we have to know that this pattern is being broken, or in a pullback strategy, if the price comes here and we see a reversal candlestick pattern, which could be an engulfing pattern, a hammer, or combination of candles, we could see some many wicks, we could see some other patterns, but we would see reversal pattern here. And my most favorite two candlestick patterns, as I told you, is a hammer and an engulfing pattern. So we want to see, we cannot trade anywhere in between. Some people trade here because this is having a mid range also here. Some people will trade here, but for me, I would consider the price patterns here, and I would enter the market according to the price patterns. So a clear price pattern we can see here is the rectangle, and we need to wait until the price comes here or until the price breaks this area. Then we will enter this market. So this is how we enter the market. And now let's see how we exit the market. As we are trading trends, our exit should be in a way that give us a very small downside and a very high upside. So let's see how we can put our exits or put our exit strategies in place here. So for example, I entered this market here on this break of this candle, and I try to exit on a stop loss or a take profit. So my stop loss could be near to this area where the price was at low. So in this case, the low of the price was this one, and I'll put my stop loss below, a little bit farther below from this candle low. And then what is my TPs? Normally I would have in a trend trading strategies, a minimum take profit is 2R. So my first TP would be, and I would not exit the position completely, I would exit the position in parts. So my first TP would be 2R, which is here, and I will put a line here. So I will mark this area on the chart, and then I will place my orders in advance. And so this is my first TP, and then the second TP, I have two options. I could ride this trend, or I could take profit on 3 hours, 4 hours, 5 hours. And if you want to take 3-hour profit, that's a really good profit. But in a trend trading, what I do, I just take two profits with the pre-orders, and the third position I would let it run. So I would take two profits here, one at 2R, one at 3R, and for the third profit, for the third TP, I would let it run, or I would not put any TP according to that, but I would see how the market is behaving. If the market is reversing and I see anywhere some candlestick pattern where the price is reversing, I would just get out there. So in this particular trade, I would still be in this market because the market has moved up and it's again making a trying a rectangle pattern, and I would take another position here while my first position would be still running, and I would take another position here. Same would apply for this one also. Let's see, for example, the price comes here and let's see, I enter the market somewhere here. I will put my stop loss below the low of this candle, or below, if there is a new candle here and it makes a low, I will put my stop loss below that candle. But as this is a big rectangle, what I would try to do, I would try to see if this giving me a 2R until here, and my first TP would be the resistance area of this rectangle. Because this is a big range, I can exit my position, or I can take my first take profit near this area. And where will be my next TPs? My next take profit would be 3R or 4R, and the next one I would try to ride the trend. So this is an exit strategy when we are trading trends, to exit in parts. Same is true for the downside. So for example, if the downside is here and I enter the market in this position, for example, this was a breakout, so because I could not enter on the resistance here, I could not see any rejection candlestick patterns which gives me indication that market is going down. So but here I could enter this market here, and how I would place in a breakout strategy, I would place my stop losses near the high area of these candles. So this was the high of this area, so these were 3-4 candles here, consolidation, and this is the wick also. So I would put my stop loss here, and my first TP should be 2R this area, and my other TPs would be to ride this trend. And what I also do is, when my first TP is hit, I just put my stop loss to the break even, so I don't lose anything and I ride the trend. Same is true for the uptrend. When my first TP is hit, what I would do, I would just put the stop loss on the break even. So if the market reverses and price takes my stop loss, I would not lose anything and I would retain the profit which I have already earned. So this is how I will exit the markets. I hope that you have learned something good in this video which will help in your trading journey. And if you like this video, please don't forget to like and subscribe. Have a nice day.